Gentlemen, Tesla's stock exploded higher in the second half of trading today following this big rumor. I mean, this would be massive for Tesla, and I will share it with you right now. China offers to address U.S. fentanyl concerns to revive trade talks. Guys, I don't know how many times I've said this here on the channel recently, but again, I think you need to start paying attention if you dismissed it, okay? There is no other off-ramp to this trade war than to start negotiations and pause China tariffs. There's no choice for the U.S. economy. For the Chinese economy as well, but really for the U.S. economy. There is no choice. As many of you that would want to argue with that, you must not understand basic economics of supply and demand. This is literally high school level econ, okay? If there is less products on shelves and the same demand, what does that mean? It means prices go up. Well, if prices go up and there's not a rise in the money supply, what does that mean? Consumers are directly getting effed, okay? Long story short. Simple Econ 101 kind of stuff here. Now, here's the deal. There's about 3 to 4 weeks of full inventory at stores right now. But there is nothing essentially coming out of China. There's been like 30 ships in a couple of days that have left China ports and are coming to the US. That is nothing, okay? It takes, I'm going to spitball here, a week or two to get those products to America. So call it 3 weeks of full inventory. Let's say it takes 2 weeks to get here to America, maybe another week to actually get on shelves. I mean, you're looking at, it's like do or die right now before you start to see the effects materialize, okay? Before it's almost too late to turn back to see the negatives, okay? You're at the moment where maybe it can all get worked out if there is a pause on China tariffs like soon, within the next couple of days. But you start to create irreversible damage or unstoppable damage the longer this goes. Give it a week or two and boom. Next thing you know, shelves are going to be running lower out of certain products in 4 or 5 weeks from now, just because of how long it takes to get things from China. Not to go into too many more details on that, it would be a disaster situation. Well, this is the first step towards getting a China pause. China caved to the US. At least that's what it looks like. I don't know if I would call it a cave, but they want to talk about fentanyl, apparently. That's kind of the cover story. What they really want is to get a trade deal done. That's what I think the US wants as well. The first step is pausing tariffs on China. Trump knows that's a disaster, right? Trump knows that's going to cause a depression or hyperinflation. I don't think he's that convoluted that he doesn't know that, okay? Or that ignorant to the facts of basic Econ 101, like high school grade economics, okay? I think Trump understands these things. But as you see, he is willing to take things right to the edge of disaster. But we all knew this was coming. I knew this was coming. This was obvious. Any moment now, you are going to get an official pause on China tariffs. I would be very surprised if it does not happen in the next 24 hours, okay? Because before you start negotiations, you're going to pause Chinese tariffs. Now, why is this so good for Tesla? Why was Tesla red in the beginning of the trading day and now ended the day in deep green territory? Why? Well, specifically, companies that do business in China are more exposed to a potential derailing further of US-China relations. Not just from a consumer perspective, like if Chinese consumers started to push back against US products, that's bad. Tesla, Apple, Nike, so on and so forth. But also from a government perspective, China can do whatever the hell they want. Okay? If China wanted to make up some weird rules or punish US companies, Tesla is in the crosshairs of that. Now, I think, Elon has a pretty good relationship with China, and I don't think Tesla would be like the first company to be targeted by any means. It is a risk that you have to account for in Tesla stock. And I think that's why Tesla is not already in the 300s. But when this pause on China tariffs actually is confirmed, you're going to see Tesla well into the 300s. I'm looking at the 100-day moving average as that level to kind of get to. That is around $333 per share. Also, good news is here today, you did get a close above that 200-day moving average at $292.20. At least at the time of recording this video. Obviously, it's volatile. We will see what happens. But a close above that is great news. Now, on top of just Tesla's, affiliation with China and the risk that was posing, of course, that has been a negative contributing factor to Tesla, but also to a broader market's perspective. With let's just imagine this trade war comes to an end by Monday. We're like, okay, we got a pause on China tariffs. We're working towards a deal. Other countries are working towards a deal. Odds are that the actual tariff rates that we see are going to be a lot lower. Sure, it's not going to be great for companies, but they're not going to need to fire people. The recession risk diminishes dramatically. If the recession risk diminishes dramatically, what does that mean? That means multiples can go up again. Because surprisingly, throughout all of this volatility, earnings expectations for Wall Street haven't moved down that much because nobody really knows. JP Morgan actually said this a couple days ago, that during times of, volatility with, taxes or anything that can really hurt earnings, Wall Street's not super fast to go out and adjust targets because things can change and then you got to readjust again and it just gets messy. What happens is Wall Street discounts the multiple, especially when there's recession, concerns. You discount the multiple, okay? Well, that's kind of where we're at right now. Nobody really knows what earnings are going to look like. Even major, banks on Wall Street, they have no clue what earnings are going to look like this year. When that happens, you discount the multiple, and that's how you get markets to fall. The multiple can actually start to recover. Maybe Wall Street is priced for really low earnings this year. Maybe if the trade war does come to an end before any of the real impact or damage is done, then maybe earnings are going to be better than we think. Maybe it's back to business as usual. Maybe we can start to focus on Trump tax cuts and deregulation. The thing that we were all talking about in February before the trade war actually started. Now, we still do have a bunch of earnings to, get through, okay? We have economic data next week, but most importantly, the Fed. So I will give you a run through of this and then kind of my bottom line on this market right now, if I'm bullish, bearish, how I'm positioned, all of that. So on Monday, you have On Semi in the morning. You have Recursion in the morning, Tyson, BioNTech, and some others. Monday and after hours, Palantir, Hims and Hers, Ford, Realty Income, Bellring. They make, what is it, like the protein shakes that are really popular? Is it Fairlife? Is one of them. Tuesday, you have Celsius, Datadog, Ferrari, Marriott, and Constellation in the morning. In the afternoon and after hours, you have Supermicro, AMD, Rivian, Tempest AI, Energy Transfer, Aristia, Upstart, Win, and Lucid. Again, EV, keep that in mind for Tesla, Rivian as well. Wednesday in pre-market, you have Uber, Walt Disney, Novo Nordisk, Teva, Unity, Vistra Energy. Wednesday and after hours, AppLovin, Carvana, ARM, Cleveland Cliffs, Axon, DoorDash, Dutch Bros, Oxy. Thursday, Peloton, Shopify, ConocoPhillips, Hut 8, and Kronos, as well as Warner Bros. And Crocs. And then Thursday, you have the Trade Desk, Coinbase, Marathon, Mercado Libre, Cloudflare, SoundHound, DraftKings, Affirm, and Wolfspeed. So you're pretty much done with your large cap earnings besides Nvidia, but a lot of these other companies can still move their sectors. Like ARM, that's going to be big for chips. That's going to be big for Nvidia. Supermicro, same there, but they already kind of pre-reported. AMD, big for chips. Datadog, Palantir, some of your software names. AppLovin, Hims and Hers, more of that retail arena. Okay, so we still have big catalysts in this next upcoming week. Besides that, you also are going to have the Fed next week. That's going to be the biggest catalyst. On Monday, ISM services PMIs. On Tuesday, you have a 10-year bond auction, exports, imports data for March. That's actually going to be important as well, because depending on how those exports and imports numbers come in, that's going to affect the second estimate for Q2 GDP. The second estimate for second estimate for a quarter's GDP is usually the one that's like going to confirm whether you're going to be negative or positive, okay? Because there's still data coming out that is going to feed into Q1 GDP. Even though it was negative 0.3%, you're not seeing a weakening in the labor market. And if things get a little bit better in these final rounds of data, maybe it could push that to actually being in positive territory. We'll see. It's going to be like a month until we get the next estimate. But, I think Wall Street wants to be optimistic about something right now. Hence the 9 positive green days in a row and the largest rally consecutively we have seen since 2020. Now on Wednesday, we have the Fed. Really not expecting much from Powell here. I actually think Powell might be a little bit more dovish than expected, especially if we get a pause on China tariffs by May 7th, by Wednesday. Because the fact of the matter is we have virtually no inflation right now. And if we're not going to see these massive tariffs, the Fed could cut rates now. Like, there's no reason for the Fed to wait. But I think the Fed wants a little bit more clarity, but they might throw that bone out there that if we get smaller tariffs, the Fed would be more willing to cut. So I think there could be some of that. Obviously, we'll talk about this more over the weekend. On Thursday, initial jobless claims, couple other data points as well, but that's pretty much it. And then on Friday, you don't have much. Couple Fed speakers. It's always interesting to hear what individual Fed speakers say after a Fed meeting, and presumably the volatility that we're going to see on Wednesday around that Fed meeting. So the bottom line really is, I'm bullish on markets. Okay, obviously you need to see a pause on China tariffs. I think that is coming. I think we've probably priced in about half of that. So I don't know how crazy the move's going to be once that's announced, but I almost have to be bullish now because I think that's the direction that we're heading in. Okay, I've actually been bullish for a while now. If you've been watching this channel, you know that. I think certain stocks are going to do better than others. I think Tesla could do better than the average stock, okay? Hence the outperformance that you've seen today. I think there could still be winners and losers, especially in like healthcare and pharma and semis, and there's definitely going to be volatility in different areas. But I think we're past peak fear. I think Wall Street can start to pick up the pieces again and try to figure out what this means for for the economy. And right now, there's still like a 60+% chance, almost 70% chance on betting markets like Kalshi that we're going to have a recession this year. If the trade war comes to an end, those odds are going to plummet and people are going to get more allocated to markets again. One big reason as well that I am, bullish here is because, again, the AI investor sentiment survey shows 59.3% of investors are bearish. That is the highest level we have seen since April 2nd. Okay, markets hit a low on April 7th. So ever since April 2nd, this is the most bearish we've been. Almost at the most bearish level throughout all of this. Yet markets have recovered a lot. Neutral investors at 19.8% and bullish investors only at 20.9%. Nobody's bullish out there. I mean, maybe that's just like the crowd feeding the crowd here. Maybe it's all the Democrats that are, super nervous about what inflation's going to be and what, the economy could look like. But I do think Trump will come to a deal with China. I think there will be a pause on China tariffs. And, you will see these recession odds die down and hedge funds and institutions that are forced to get allocated to markets again. Now, you can also see here with the CNN Fear and Greed Index, the put and call options, the 5-day average was just an extreme fear earlier today. It did fall down to fear, but this really just highlights how much protection there is right now on portfolios. People are not like leveraged to the long side right now. That's really like abnormal. Like if you are in margin right now and you don't have puts, you are in the minority group right now. Okay. Most people are not taking bets like that. And although that's probably not the greatest, it's probably not the greatest time to do that. Normally when the minority is, a certain direction, like, let me put it like this. When, everyone is bullish and nobody's bearish, it's probably time to be a little bearish or take some exposure off the table, not to be 100% long in margin on that market, okay? When everyone is bearish, when everyone is positioned bearish, it's probably not a terrible idea to be bullish. That's where I feel like we are now. I feel like the markets are doing one thing and people are positioning the other way, right? Markets are going up, but people are not getting more bullish, right? And I think, you always got to prepare to be surprised. And I think one of the surprises could be a pretty aggressive rally in markets upon the ending of this trade war, even to get back to where we started, right? Around 611 or so on the SPY would give you almost an 8% rally from here. 8% on the headline S&P could look more like 30 or 40% for a stock like Tesla, right? For some of your small caps, could look, a lot bigger than that. So, yeah, I don't think the S&P has like a great risk reward here, but I do think internally in our markets, we do, okay? With certain stocks. And I've said for a while now, I think this is a stock picker's market, and I really think it will continue to be so, okay? Even like Goldman Sachs and JP Morgan, like major Wall Street banks expect the S&P is not going to do much over the next decade. If they're right or wrong, I don't think that matters. I think there's going to be big winners internally in our markets, and those are the areas that I'm focused on. Tesla, Sensata Technologies, right? CRISPR, I think long-term is going to be a big winner. Okay. Many other stocks as well. Like pick a stock, it's probably going to outperform the S&P if it's a good company. That's my thought process here. So I think it's kind of hard to lose from that perspective, as long as I'm right and there's a pause in China tariffs. If I'm wrong, then obviously, you're going to regret being long this market. I am not a financial advisor. I'm not a financial planner. I am long this market. I am not short this market in any way, shape, or form. I have not been for the last couple of weeks, and it has definitely been the right choice. And I think there is probably more of a rally left than most people would think. Certainly more than the average guy on Wall Street would think. So, again, if we get a pause in China tariffs, I could easily see Tesla back in the 300s next week, as high as the 100-day moving average at around 332, 333, or even $335 per share wouldn't surprise me either. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day and weekend. I will see you in the next one.